So thank you everyone for joining us today and welcome today for our Intro to Finance. This topic is part of our nonprofit financial series, which focuses on improving your financial management and processes, hopefully in a practical way. Hopefully today's session gives you some good touch points to assess whether your organization may need some work. My name is Liz Tang. I am the education coordinator at IntegralOrg, and I use the pronoun she, her. And I'll be around hosting and monitoring the chat. And so without any further ado, let's go on to our land acknowledgement. So at IntegralOrg, we acknowledge that what we call Alberta is the traditional and ancestral territory of many peoples, presently subject to Treaty 6, 7, and 8, namely the Blackfoot Confederacy, the Kainai, Piikani, Siksika, the Cree, Dene, Saulteaux, Nakota Sioux, Stoney Nakoda, the Tsuut'ina Nation, and the Métis people of Alberta. This includes the Métis settlements and the 6 regions of the Métis Nation of Alberta within the historical Northwest Métis homeland. And we respect the histories, languages, and cultures of First Nations, Métis, Inuit, and all First Peoples of Canada who have lived in and cared for these lands for generations. We are grateful for the traditional knowledge keepers and elders who are still with us today and those who have gone before us. And we make this acknowledgement as an act of reconciliation and gratitude to those whose territory we reside and work on today. All right. So I'm very happy to introduce today's facilitator, Stella Penner. She has decades of experience providing financial reporting and governance support to charities and nonprofits. Previously, Stella had held various roles in professional development and as a full-time instructor in financial management and accounting, audit, finance, as well as organizational design and analysis at universities and colleges in Edmonton and Calgary. And she also has executive experience as prior CEO of FCGA Alberta. So if you have any issues, please do message me on chat, and thanks all for joining us.
Thank you, Liz. So it's maybe a little bit redundant to have an overview of a session that is in itself an overview. So I just want to stress that while the title says we're going to cover the controls and policies that every organization needs, as you can imagine, an hour is not going to be a comprehensive or detailed look. What I'm hoping is that as we go through some of the topics, that you will either say, yep, we've got that under control, or, oh, maybe that's something that we need to look at. And it's more of a take the temperature of your organization than definitive answers or detailed answers on the questions that you may have. So what we're going to be talking about today is the roles of different parties to the financial processes. We'll look a little bit at the nature of financial information that your board may need. And then we're going to talk about what do we mean when we say internal control, because everybody has a little different picture in their head when they hear those words. So we'll talk about that. And then just go through at, 60,000 feet, look at what are some key financial controls that every organization should have. And finally, we'll just wrap up by talking about what the connection is between doing budgeting and internal controls. So that's sort of our topics and our roadmap for today. So when an organization handles money, so that's pretty much everybody, and when that organization is a nonprofit, there are some specified roles and responsibilities that everybody needs to be aware of. And I have found it very helpful in my management and executive life if everybody has a really clear understanding of what their role is for several reasons. One, if everybody knows what their job is and what their duties are, then things don't fall between the cracks, but it also reduces the likelihood of people stepping on each other's toes. And what I have found in my years of working with many different nonprofits of different sizes, huge ones, 50, 60, $100 million organizations, down to organizations that maybe have 20 or 30,000 in revenue. So all over the place. is that people come to the organization with different expectations of how things should be run. And so somebody that comes from a little volunteer-led, volunteer-based organization that has maybe no staff or one part-time staff person have a very different perception of what the board does than a big organization, say like the Drop-In Center or something like that, that has a professional board, or, you know, professional organization like CGA, which has people from all across Canada, and the board meets only 4 times a year. So it's important that within your organization, there are some roles and responsibilities that cannot be delegated or shifted around, and others clearly can, as long as everybody understands who's doing what. So as a nonprofit, the board of directors are responsible to the members and to society at large. And they are like trustees. They have fiduciary responsibilities under legislation that they cannot delegate to staff. So that is one non-negotiable. The board has a responsibility to oversee the resources, which includes the finances of the organization, because they are not looking after their own money. They're looking after the donors and the funders and the members' money. And so the board has certain high-level responsibilities for oversight, planning ahead, saying what direction is this organization going? What is our priorities going to be? That's the role of the board. And then monitoring to make sure that those priorities are actually being met and that risks are actually being mitigated and so on. So that is sort of the minimal level, minimal amount of board responsibilities. Again, in a very small organization, the board may also be the managers. They may, a condo board, very often the board is more like a management board than just an oversight board, but that's sort of the minimum. Within the board roles and responsibilities, there is often an individual appointed as a treasurer, or they may have an audit committee, or they may have a finance committee. But very often the board will delegate some or all of its oversight responsibilities to either an individual or a committee, which we would normally think of as the treasurer if it's an individual, or a finance committee if it's a committee. And so the treasurer, you usually expect to see somebody with a little bit more financial experience and education, perhaps. Doesn't have to be an accountant. Somebody with good business sense, someone who knows how to read a set of financial statements would make a fine treasurer, even if they're not a professional accountant. And so they kind of play a liaison between the board and the financial activities, and help the board to make sure that things are kept up to date, help the board to understand and interpret financial information as it comes to them. And very often will provide liaison between the board and the external auditor. Then the other party or parties in the financial process is whoever is actually recording the transactions. And again, a tiny organization, the treasurer may do it themselves. In a larger organization, you may have a department of half a dozen or more accounting people, all the way from a CFO right down to a junior bookkeeper doing data entry. And so you have a variety of people, but somewhere there's somebody whose responsibility is to actually record the financial transactions. And so in today's course, we're going to refer to them as the accountant. So when we're talking about a bookkeeper or accountant, we're talking about that person, normally a staff person. Many small and mid-sized organizations will hire a contract bookkeeper or accountant who will do it on a part-time basis. But that's basically the person that sits down at the computer and enters the transaction, does the bank balance, and so on and so forth. And very often, normally, that person would report to the executive director or CEO. I'm going to use the term executive director for the senior staff officer. So the bookkeeper works for the executive director. The treasurer works, quote unquote, for the board. So that's the difference between the two. So that's who we're talking about today and what the different roles are. And as I said, a lot of time there's overlap or duplication in very small organizations where one party holds multiple roles. So when we're talking about financial information, what kind of financial information should the board expect to get from management or from whoever is doing the accounting? In order to fulfill their responsibilities, their fiduciary and stewardship responsibilities, the board needs to know, where are we today? What's our current financial situation as of right now? They need to know, where are we going? If we continue on this direction, where are we going financially? Are we able to move forward? Do we have the resources we need to fulfill our plans and to put them into place? And then the other thing the board needs is financial information that will allow them to plan ahead. There's no point in having a fancy strategic plan if you haven't figured out where the revenue to put the plans into place is going to come from. So planning ahead requires a certain amount of financial information. And then monitoring, which is the oversight part of what the board does, is looking to see, are our priorities being addressed? Are we in good financial? Is there changes in our financial situation? So monitoring. So those are the main decision points that boards have that they need financial information for. So what kind of information tells the board where we are today? Well, the most basic one is the statement of operations, or you might refer to it as the income statement, depending on what accounting software, or whether you have a business background or a nonprofit background, you may call it an income statement. But it's basically the difference between revenue and expenses. And I want to stress, it's not the same thing as a cash flow. So revenue does not necessarily get recognized when the money comes in, but when it's earned. So if you are invoicing participants in a program and you deliver the program today, but they don't pay until next month, or maybe they paid in advance last month, the revenue gets recognized in the month that you deliver the program, not in the month that the individual is paid for the program. So if you get a grant, for example, let's suppose your year end is December, and you get a grant that runs from April to March, which lots of federal grants do, then only 9/12 of that revenue belongs to this year. The other 3/12 belongs to next year. So a statement of operations would report that portion of the revenue that applies to the current year, not the amount that you actually received. Another piece of information that helps the board see where things are at is by comparing the actual income statement to the budget. We had expected to get in $1 million, but we only got in 900,000. What are we going to do about that shortfall in revenue? We had expected that our salary expense for the year was going to be 800,000 based on where things are at. Now it looks like it'll come in about 750 because we had a couple of people leave and they weren't replaced immediately. So we have a little bit of cushion there. So those are the reports that talk about the financial activities. They're like a story. They cover a period of time. The next one that I've listed there, the statement of financial position or the balance sheet, is a snapshot at a moment in time. So it's the cumulative effect of all the past stories that have been told. So we got in revenue over the last 10 years, we got in $10 million worth of revenue and we had $10 million worth of expenses. So we have zero in the bank. And so the fact that the cash on the balance sheet says zero isn't a bad thing. It's just cumulatively, that's how much there is. So the statement of financial position tells us, what do we have on hand? What resources do we currently have access to? And what are our obligations based on our current payables and liabilities and so on? The other piece of information that your board needs, and in my experience, in my many years as an auditor for nonprofits, I found a lot of boards didn't look at this very closely, is to understand if any of the assets you have are restricted. And so the example that I gave you before about your contract year, your revenue year is different than your fiscal year. If you have a December year end, you got a grant in April that's supposed to go out for 12 months. That means, let's say you got all the money up front. That means at the end of December, you've only spent, or should have only spent 9/12 of that. So you've got all of the money in the bank, or you've got like the whole 12 months worth of money in the bank. You've spent about 75% of it. 25% of it is still left. Well, that's great. We've got a cushion. Well, maybe you don't, because that money can only be used for very specific things for that program that federal government is funding. So that is restricted cash, or a deferred contribution that is limited in what it can be used for. And just looking at the balance sheet and saying, oh, good, we've got money in the bank, is not helpful if we're not aware that that's committed to a specific activity or to a specific program. It's not available for general use. And so I would encourage boards to not only ask for an income statement or a budget to actual income statement, but also look every time, quarterly or monthly, is look at where things are at as far as that committed or restricted money on hand. So that's the information, the kinds of reports that tell the story of where we are now. Another set of financial information that the board needs, or decisions that the board makes that involve finances, is around where are we going. And so the common starting point for many organizations is a strategic plan. So the strategic plan is sort of high level. These are our priorities. These are some new initiatives that we would like to focus on over the next 3-5 years or so on. So that's one piece of the where are we going picture. And another important piece of the financial information about where are we going is especially important for organizations that have a lot of money invested in capital. So like condominiums or organizations that own their own building, they would need a capital life cycle plan. When are there going to need to be major upgrades or major repairs expected? So if you're a community association and you have access to a building that you own and manage, you need to know, when is it going to be due for a new roof? How long is that boiler going to last? And so on. That's an important piece of financial information to help us figure out where we're going. Most budgeting is done on a 1-year cycle, but I always like to also think about 2 to 3 years out. So, you know, and that's a little bit more detailed maybe than a strategic plan and priorities. But if we've got some new program that we're piloting, what are the implications for that, not just for the current year, but also several years out? I had an organization I was on, I was treasurer of, and when I came on, it was very clear that they didn't have enough cash flow to income to pay their staff. And I sort of said, how did this happen? Because they had a policy that they would never budget more than 50% of their revenue for salaries, so that there was they weren't overcommitted on salary costs. And yet when I looked at the salaries for the year, they were well over the 50% of the total budget. So I asked the previous treasurer, how did this happen? He says, well, the executive director said he wanted to hire another staff person in October, and would that put them over the 50%? And the treasurer said, I said it wouldn't for this year, but I pointed out that for the next 2 or 3 years, it would put them over the 50%. And he says, well, I don't care. I only care about this year. And so they got themselves into a bit of financial hot water for not having looked at that 2 or 3 year projection, just focusing on the immediate year that was at hand. And then, of course, the most detailed piece of where we are going is the current year budget, which would be based on a plan of action. So where are we now? Where are we going? And then the third sort of category of financial information that I think boards need is information that allows them to monitor whether their decisions are being implemented and helps them to plan for the future. So the obvious one is one I've already mentioned, comparing actual to budget, but it's not just the comparison that they need. They need to know why it's different. So if there is, and again, I've given this example, some of you have been in sessions that I've taught before, and I give this example because to me, it's just such a telling situation that occurred, is I had an employee. I'd just been promoted and to executive director. I had was asking for my managers for their mid-year variance explanations. And so one of my managers was very pumped because he had come in, it was middle of the year, and he had so many savings. Oh my goodness, he was coming in so much under budget with his costs. And he just thought he was going to get a pat on the back from me. So I said, oh, okay, well, let's look at your activities for the year. At the beginning of the year, when you developed your budget, you were planning to make so many visits to post-secondaries and high schools to promote our education program. So how many visits were you planning on making? Okay, well, he was going to make like 30 visits and 20 visits, whatever the number was, I don't remember. And so I said, so how many have you actually made? Well, he had made almost the number of post-secondary visits that he had planned, but he had made 0 visits to high schools. So I said, well, the explanation for the variance is, and I didn't put it quite so bluntly, but the explanation for the variance is you haven't been doing your job. Like, whoa, you saved money, but the explanation tells me that the plans were not being implemented. And so those explanations are often more insightful than the actual variance. The other thing the board needs to know is what is management planning to do in response to those variances? So I didn't fulfill my plans to promote our program in the first half of the year, but what am I going to do to implement those plans in the future? Our utilities costs are up because utilities rates went up, gas rates, electricity, whatever went up. Well, what are you going to do to find offsetting savings? So, okay, well, we can cut here, we can cut there, we can turn the thermostat down, whatever. So what are we planning to do in response to those variances? Most of this kind of planning and monitoring would probably be done on an exception basis, where you don't look at every little minor difference, but just where there's significant ones and focusing on ones that result from changes in plans. And finally, the board wants to know is, are our plans and policies being carried out? So let's go back to the beginning there where I say the board may set a strategic plan to say, okay, we're offering services to adults. We're going to start reaching out to teenagers as well as to adults. So we look at the reports, the financial reports, and there hasn't been any money spent on targeting teens. Okay, well, we said that was a priority for this year, to shift some of our resources from adult programming to teenage programming. So we can see from the fact that though no money has been put into a new program, that our plans and policies are not being carried out. So, and all of that information comes out in the financial reports. So that's a really quick overview of the kind of information that boards, financial information that helps boards fulfill their roles. So let's take a look at the scary word, financial controls or internal controls, and just focus for a moment on what the purpose of controls are. The main purpose of controls are, those are policies and procedures that will ensure that management's policies get implemented. So there are ways that management can make sure that the staff and volunteers fulfill their responsibilities without having to look over their shoulder all the time. So that's the whole point of internal controls. Another one is to protect assets. So you may have a policy of who locks the door when you all leave the building at the end of the day. Asset protection. Who makes sure that the deposits are taken to the bank? Who makes sure that nobody has access to the checking account that shouldn't? Asset protection. Those are all internal controls. Risk mitigation. Controls, let's just imagine you're an organization that works with children. And so if anything bad happens to one of the kids, there's a risk that something bad will happen to a child. And furthermore, if that happens, that your organization's reputation will be harmed. So you want to have policies or controls in place that will reduce the likelihood that a child will be harmed under your care. And other controls are focused on efficiencies. By everybody knowing their job and doing their job, it's more likely to be more efficient. And then finally, there's controls that are more after the fact and allow us to monitor what's going on in the organization. So the purposes are policy implementation, asset protection, risk mitigation, and efficiencies in monitoring. So what do we mean by internal controls? There's sort of two broad categories. And the first category are what we call general or entity-wide controls. These apply to everybody in the organization and affect everything we do. So things like having a code of ethics, having consistent hiring practices to make sure that we check references, for example, before we hire new staff. That's an entity-wide control that increases the likelihood that we'll be hiring the right people for the right job, hiring competent and capable people. And so it doesn't just affect one little thing we do, but it affects the whole organization. But again, we often see and hear more about specific application controls. How do we enter accounts payable? Who approves invoices? Who signs the checks? Those are specific or application controls. And so passwords, let's just take an example. So a password that requires you to use a password to log into Microsoft Office is a general or entity-wide control. A password that is required to log into the donor database is an application control. So the same process can be entity-wide or can be application-based. And again, application controls might be preventive. So that password that allows somebody who's not authorized to get into the donor database, or they can be detective. So doing a bank reconciliation is a detective kind of control, because it tells you about things that have happened that shouldn't have happened. It helps you find mistakes and correct them on a timely basis. And then the third type of control or category of control is separation of duties, where you want somebody who has custody of an asset not be able to decide how to dispose or disperse it. So for example, the person who is issuing the checks and making up the checks shouldn't also be the person who approves the vendor invoices and signs the checks. So you want to have that custody of the checks separated from the ability to disperse of the cash. If you have cash coming in the door, some organizations still have some of their revenue coming in the form of cash. You want to make sure that the person that accepts the cash at the door isn't the same person that then takes it to the bank. So general or entity-wide controls involve, a lot of them are what we would think of as organizational culture. So do the board and senior management, how seriously do they take policies and procedures? Or are they always saying, oh, we'll just let it go this time, or, go ahead and issue that check to me. Just make an exception. We won't get the president's approval on this one. It's okay. So that sends a tone from the top that these policies only apply down below, and senior management doesn't take the policies very, very seriously. So knowing your people, hiring the right people for the job, having a good sort of tone at the top where everybody takes policies and procedures seriously, limiting access to information we've already talked about, making sure that there is password and other protections, and then clear policies such as the value statement, conflict of interest positions, codes of ethics, and so on are considered entity-wide controls. HR policy manuals would generally fall within entity-wide controls as well. So some of the specific application controls, I've already mentioned bank reconciliations. To me, the bank reconciliation is a really key control, because at the end of the day, every financial transaction at some point goes through the bank. And so by doing the bank rec on a regular and timely basis and having it reviewed by someone other than the person who prepared it really provides a lot of comfort that the accounting records are accurate at the end of the day. Yeah, maybe something got coded to the wrong account, but at least it got recorded. So I think bank reconciliations are really important. And I even would suggest that they be done more often than monthly, which some of you that do bookkeeping may be in horror at that. But I remember I had one place I worked at where I oversaw a department of 5 accounting staff. Each of them had a different project they were in charge of. So they each had sort of a bank account that they were in control of. And I said, I want you to start doing the bank recs every Monday morning. And they were, oh my goodness me, no, we don't have time. It takes hours to do a bank rec. I said, trust me, we're going to do a competition. 2 of you are going to do them weekly and the other 2 are going to do them monthly. And we'll keep track of the total time you spend on bank recs. And sure enough, the staff that were doing them weekly did them in total, much more quickly. So instead of spending 2 hours digging through trying to find mistakes that happened 6 weeks ago, they were finding them immediately. And they were shocked that what took 2 hours a month was now taking about 10 minutes a week. And so but anyway, I digress, sorry. Other specific controls are who approves purchases and who approves payments. Now, I want to be clear that purchases and payment approval are 2 different things. One is approval of initiating a transaction. The other is the approval to pay for the transaction. So those are separate. Hiring and payroll policies are often considered specific. Some organizations put them into entity-wide category. I'm sort of on the fence on that one. Financial reporting and so on and so forth. So let's look at each of these in detail. But before we do, I just want to clarify, I keep talking about checks and cash, but as you no doubt know, not many of you use exclusively checks anymore, and certainly not many of us use a lot of cash anymore. There's a few limited kind of organizations that do. So cash, checks, and credit card payments, I think that all of you are quite familiar with. That next list of 4 there, kind of blur together, but they're very different from a point of view of controls. So electronic funds transfers, when I'm talking about EFT, I'm talking about that process where the bank has a lot of security. If you're with RBC, you have to have a kind of a fob, and a different person will initiate the EFT, then who will go in and approve it. So there's two people have their hands on the EFTs. So there's different ways that controls can be put in place over EFTs. Pre-authorized debits and credits is when you go into your customer's bank account and pull out a regular monthly donation or a regular monthly payment. Your utilities companies will do it from your bank account, for example, or you often pay phone, utilities, rent, and so on is often paid by pre-auth. Our condo fees are paid through pre-authorized debits or credits. Those are automatic and recurring. There can be either fixed amounts, or like utilities, it's whatever is owed that week or that month. And then I'm coming back to e-transfers last for a reason. Wire transfers are not used as commonly now. Now that all the banks in the last 10, 15 years have got pretty good EFT processes in place, wire transfers is how we used to ship money around before the EFT processes were as sophisticated as they are now. They're now mostly used for international payments or large one-off payments. And e-transfers and Interac are also maybe referred to as email payments. It's like if you're going to send your friend some money, you get their email address and you go to your bank and you just send your friend the $10 you owe them for dinner or whatever. When the COVID happened, a lot of organizations started accepting donations by e-transfers. I just want to be very clear that e-transfers, both as a payment type and as a revenue incoming type, have the lowest security of any of these kind of payments. Because I said to one bookkeeper, I said, oh my goodness, you're getting all these donations by e-transfers. I said, you could put them in your own bank account, right? And she said, oh, we have it set up for automatic payment, automatic deposit to our organization's bank account. I said, you can go in and change that, right? And she was just horrified. She didn't realize she could change it. Well, guess what? A lot of people know they can change that. And during the last few years before I retired from auditing, that is where the most petty fraud happened, is individuals redirecting e-transfer incoming payments. The other side of when you use e-transfers to pay out, it means that whoever has access to your bank account without any approval, just one person touching it, can send money to someone whose email address you may spell wrong. And so there's no verification process for e-transfers that so if you're doing e-transfers either for payment or for incoming revenue, that's something that you may want to revisit and try and find a method that requires at least two hands to touch the payment or two hands to touch the incoming. So the bank reconciliation I've already talked about. I do recommend that the bank reconciliation be prepared by one person and reviewed by someone else. So if it's a very small organization, that review may be done by the treasurer. If you have an accountant doing the bank rec, the CFO or the controller may do the review, but I always strongly recommend that that they initial it, or they change the name, or they have a log or something that they say, this is the day I reviewed it. And when you review the bank rec, you want to see the bank rec, and you want to see this month's bank statement, and you want to see last month's bank rec, so that you can follow up on transactions that were outstanding at the end of the prior month. to see, again, the not uncommon fraud that we found several times during my audit time is outstanding deposits that didn't clear for months and months. Well, there's something wrong with that picture. It's one thing if a check doesn't clear, then that means it's on the other party side. But when an incoming deposit doesn't clear for several months at a time, money's gone missing. Specific approvals, again, as I said before, you want clear policies and procedures as to who approves the purchase. Does the person who oversees the budget for a particular department or particular program, they should theoretically have purchase permission. If you've if somebody is managing a program where they feed kids lunch every day, Monday through Friday, that person needs to have the authority to go and order food from Costco or wherever it is that they buy their food. So if they're accountable for the budget, then they should probably also have the authority to initiate purchase permissions. And then they should code it and say, yes, this is coming out of my budget, this is coming out of the food budget line, and I'm okay, we did receive this order. Then the person who's approving the payable for payment is separate from the person that approved the purchase, because they are more concerned about having the cash flow to make the payment, not the fact that we got the food order, but yes, we have the cash in the bank to pay it. So, so those are the kind of policies and procedures you want to have in place. And if you're making your payments by EFT, what we used to do at my firm is our accountant would make a list of these are the payables that I intend to pay on this week's run. And so one partner would approve that. Yes, these are the right ones, pay these. Then she would initiate the batch in the bank. I think we used ATB if I remember correctly. And then I would take that list that had been approved by one of my partners, I would log in and I would release the payments. So I would release that batch. So there was the preparer, that would be like printing the check. And then you had somebody approving, yes, these are the ones we want to pay. That's like the first signature. And then me going in and releasing the batch is like a second signature. So that would be one way of making sure that there's several approvals in sequence that are documented. For deposits and revenue, again, you want to have policies on if you're still getting checks or cash in, or if you're getting PayPal payments in or through credit cards, you want to have some sort of a policy where those are transferred to your bank account on a fixed day, or like every Monday they're transferred over from Stripe or from PayPal or whatever, so that you have that consistent date. It certainly helps with the bank recs if those are done on a specified schedule. If there is checks and cash coming in, you want policies on how often they go, like maybe minimum of once a week, or if the total on hand is more than 10,000 or whatever, then it's got to go to the bank. And then dealing with e-transfers, if you can't break away from them altogether, it's important to ensure that more than one person has access to the email address to which the e-transfers come, so that the person who has access to the bank account and somebody else both see those transfers coming in, and then can follow up to make sure that they actually made it to the bank. So that's I realize it's unavoidable, and it takes a while to move to a different system if you have been accepting them. I certainly found since COVID started, a lot of churches just went to email payments for their donations, and just made the work for the bookkeepers like multiplied by hundreds of times, because instead of having one nice donation bundle every week, at your faith service, you now suddenly had several dozen coming in every week, or hundreds even coming in every week. So again, if you can avoid that, I think that would certainly make everybody's life easier. Another set of controls is around hiring and payroll. So you want to make sure that any hiring, that whoever processes the payroll gets the approval in writing from the managing person, whether it's HR or a department manager, that there's a written offer made to the new employee, and the payroll processor gets that in writing. So you can use payroll change forms, you can get a copy of the hiring memo, something like that. But I would recommend quite strongly that at no time do you change someone's pay just based on a verbal say-so. Oh, would you please increase, Joanne's salary from $15 to $17 an hour? Oh, okay, no problem. Who told you that? Well, Joanne. Somebody told me I got a raise. So you would always want to see all of those changes in writing. And so keep in mind that the payroll file is normally something separate from the HR file. So the evaluations and stuff go in a private personnel file, but the payroll part of a person's file should be accessible to someone in accounting. So it's not that they wouldn't necessarily see their employment evaluations, but they should have the access to pay changes and entitlements and things like that. Using an external payroll service, whether it's Payworks, ADP, or Ceridian, is also helps enhance controls over payroll, because a lot of mistakes that can occur get caught in that process. So I strongly recommend, if you have 2 or more employees, that you go to an external service. And then controls over financial reporting, who gets what reports. So if you have a department manager that's responsible for the finances of that department to keep it on budget, that person then should get financial information. And there's a question about contract staff. I'll try and take that up during the Q&A at the end. The department managers who are being held accountable should have information about what they're being held accountable for. So a person should not be held accountable over something over which they have no control. It's just an HR concept that I think we all understand, but they should also get information in a form that they can understand. So it's very frustrating for a program manager to be asked the day before a board meeting, hey, I have to explain why your department is over budget. And you go, I don't know. Like, could you give me a list of everything I've spent? That might help me. So have some standard reports that go to managers on specified dates that they can review where they are with their departments. And then a higher level, more aggregated information would go to senior management, and then an even more aggregated financial information would go to the board. And then you will also have financial information that goes obviously to outside parties. And that is also a form of internal control, because say you have funding from Alberta Education, there's a very specific format that your reporting has to take. And by comparing to the funder approved budget to your actual, it helps you establish that you're in fact coding things to the right program and to the right funders. And then the last set of controls that I want to mention just briefly is regulatory compliance, because all of the other financial controls that we do aren't going to be worth nothing if we lose our charity status, or if we get dissolved because we haven't been filing our annual returns with corporate registries or whatever. So it's important to know what all those regulatory filings are, whether it's a T3010, a GST claim, tax returns, program reports that need to go to specific funders. And somebody in the organization needs to have a list of here is all the filings that we have to do, how often they have to be done, where does it go to, who's responsible for gathering the information, and who's responsible for sending it to the party in question. And so just have a log or a register or a roster of all the different regulatory filings that need to be done so that everybody knows who's doing what. Oh, I thought you were claiming the GST rebate. No, I thought you were doing it. Oh, we haven't claimed it for 4 years. I wonder why not? Because 2 different people thought the other person was doing it. So because we didn't have a log anywhere. So that's an important, very specific application control. And then the last bit I want to talk before we mention before we turn to our emergency alert is just a reminder that budgeting is part of internal controls. Budgeting is planning. It's not just an artificial thing that we sort of lay over top of us. When we're doing budgeting, we want to know what are our priorities. We'll get that from the strategic plan. What activities are we going to do to achieve those priorities? In other words, how many presentations am I going to do at post-secondaries about our program? Where is the revenue coming from to enable those activities to take place? And then finally, how much will it cost to do the activities? And so that's kind of a circle or an iterative process that is not going to be done in one pass. So your budgeting needs to start early enough in the process that you can refine it. And if you find you don't have enough money to do the activities to achieve the priorities, then you either have to cut back on the priorities or figuring out other sources of revenue. But budgeting is very much activity planning, not just money planning. I just can't stress that enough. And once the budgeting is done and is approved, it's important that you understand, and different organizations have different policies, so I'm not saying what's right and wrong, but does approval of the budget give the department heads permission to spend the money, or do they still need separate approval? So very often an organization will have a policy. Once the budget is approved, the department heads can spend that money, but if it's an expenditure of more than, I don't know, $10,000 or some amount like that, it needs to be approved separately in advance. So what are those policies around spending and approvals? Budgeting is also, like I said, a statement of our priorities, and it forms the basis throughout the rest of the year to monitor the activities. But many financial controls within a nonprofit are actually built on the whole budget process. And so I would be concerned if an organization either has a perfunctory, there we go, there's our emergency. If an organization just has a cursory budget process or none at all, I think that would be a bit of a concern to me as far as having other controls in place as well. So just to wrap up before we move to questions, reminder, do you know what your role is? Some of you may have multiple roles. Some of you may be volunteer as a board member in one organization, but you're an employee in another organization. So, but in each organization that you touch, do you know what your role is? Does the board get the financial information they need when they need it? Do you have just some of the basic financial controls that we talked about? And are you using budgets effectively? Those are sort of the areas that you might want to think about. I'm going to ask Liz just briefly to mention, if you want to follow up on some of these, what we can do about that. Liz, if you could talk about clinics.
Thank you. Yeah, so sometimes there's questions that arise, and I saw some questions in registration that need a little bit more in-depth information about your organization. And so in those cases, we might refer you to one of our free problem-solving services. So not as a way to brush off your question, but so that we can give you the most useful answer as possible. So these sessions can look like a short phone or a video conversation, or a full 1 hour problem-solving session called clinics between one of our IntegralOrg experts. Sometimes it's Stella and your team. And so we are a nonprofit ourselves, with experts that are really well versed in the nonprofit world. And so these sessions are just part of our mission to educate and support Alberta nonprofits. And I do recognize the time here today too. So I'm just putting in a few links into the chat, with links to our clinics as well as our newsletters. If you have interest in some of our other financial workshops or other workshops in other areas, that's the link there. And then we also have our link to the survey as well for this particular workshop. But yeah, let's just hop right into questions. I got one in the chat that I actually want to bring up as a sort of way to wrap up. Oftentimes after this, it can be overwhelming to be like, hey, wow, this is a lot of work and administration. Maybe they're an organization of just 4 people. And so what can you say to those small nonprofits who see all of this and feel overwhelmed?
Oh, yeah, that's a good question. Chances are that an organization that's that small is not dealing with huge amounts of money. So that's a certain amount of comfort there. It is overwhelming to see it all at once, like I've just laid out in the last hour. Many of these may not apply to you. If you have only very small amounts of revenue coming in, you might be a parent association that runs bingos or something like that, and that's your only source of revenue. So having the basics of, having a checking account, knowing who signs the checks, having that person give a little summary of ins and out, like money in, money out, once a month to the other board members, the other committee members, and being prepared to answer questions, that may be sufficient. Now, if you're also if you're a registered charity and you're really tiny and you're issuing donation receipts, now you need to have some specific controls around understanding CRA rules around receipting. So now it's starting to get more complicated. So if the individual who asked that question wants to book a clinic, I'd certainly be happy to spend some time in a clinic talking about sort of prioritizing which controls are probably indispensable and which are really more relevant to large organizations. I don't know if that answers the question. And it's 2:00. If some of you have to leave, I understand that. I'm going to stay and answer questions as long as people want, but I do want to move to the next slide for anyone that does have to leave because of another commitment, is just to remind you about the.
So I think another question for those smaller shops, and then I do have one after that for those folks who feel that they are beyond this question, but what sort of staff would you say is needed? So for example, minimal staff needed, bookkeeper, do you need an accountant, AP clerk?
Well, I worked as, so before I retired from my practice, I spent the last 15 years in a public accounting firm, and most of my efforts focused on audits of nonprofits. And a large percentage of our clients were what I would call small and mid-sized charities and nonprofits. Many of them just had a part-time bookkeeper that might come in 1 day a week or half a day a week. So somebody in the in the organization might take care of issuing checks and getting deposits into the bank, and then they'd have a part-time bookkeeper. So they would split the work between the admin staff and a paid part-time bookkeeper. So it really depends on the volume of transactions that you have. It's very, I can't make a blanket statement. We had some organizations that had, over $1 million worth of revenue that relied on a 1 day a week bookkeeper. So, but they had fairly simple revenue structure in that they had several main contracts and didn't get a lot of small donations. So they didn't need a lot of accounting staff.
Great. Okay, so the next question is somewhat more of a comment, or ask for a comment. And I'm pairing this up with another one that we just got. So I wrestle with paying directors who work hard to fulfill their roles while getting volunteers to do some of the work involved in the associations. Any comments on that? / also, could you possibly be paid as a treasurer if you're also doing the bookkeeping?
I don't think it would be good practice for a treasurer to be paid. Normally the treasurer is a board role. Like if you have to look in the bylaws of your organization, which usually have a definition or a description of what the treasurer responsibilities is. So it'd be very unusual for the board treasurer to be a paid position. I understand that some organizations have a position that in the corporate world might be called a comptroller, that they use the title of treasurer for, but then that person reports to the CEO or to the executive director. They don't report to the board. So it's not common to use that title for a paid person.
Okay. And I will point to the chat below. There are sometimes questions that come up where it's really great if we as a group here can answer and help each other out. We just got one about an accounting or bookkeeping software that can handle 2 ledgers, somewhat specific, but there were some questions in registration where people were asking about the best tools for tracking cash flow, managing budgets. Stella, would you like to comment on that? And I welcome people to help the folks in the chat as well.
So the 2 ledgers question, I'm not sure if it's because it's a single organization that's doing fund accounting or if it's 2 separate legal organizations. So if the person who asked that question can clarify for me, are we talking about 2 separate legal organizations or
one organization?
But does fund accounting?
Specific one, yeah.
Yeah, there is workarounds, so that require quite a bit of discipline. So you can use classifications within QuickBooks or Sage or that kind of basic off-the-shelf software. You can classify your transactions between the 2 segments that you want to differentiate between. But it would be unusual to have 2 entirely separate ledgers for one organization. Because then that means for your actual fiduciary responsibility reporting and your legal reporting, your tax reporting, you're always having to do consolidations. So it would be better to design your chart of accounts and account classifications to enable separate reporting for different departments, if that's what you're looking for.
I would also recommend, if folks do want to find great technology deals for nonprofits, oftentimes we look at TechSoup, which gives discounts for great applications that might be useful. We had a few questions on budgeting, so I'm curious if you have any comments on any courses on nonprofit bookkeeping or CRA or charitable status courses for folks that kind of want to go beyond the fundamentals and learn the nitty gritty. There were a few questions about best practices to manage small budgets and Yeah.
Okay, I'm going to answer that question and then I'm going to come back. I see a question
Okay.
about the role of the treasurer in adequate controls. So someone has asked this question before. So I looked and I online, and Mount Royal, SAIT, and Bow Valley College all have bookkeeping courses outside of their degree programs, but in their continuing ed area. And I don't remember which is which. One of them was a sort of a package of 4 courses that you could take. One of them was, I think, just a one-off course. So you could start with those organizations. If you want to do something online, and I cannot speak to the quality of this. If it's SAIT, Mount Royal or Bow Valley College, it would be accredited individuals teaching it. But I also noticed that some private colleges like CDI College had some online stuff. I don't know whether that's good or reputable, but it is available. And then the software companies often will have like online webinars that you can take to introduce them to their software, like QuickBooks or whatever, that will also then help you learn some of the basics. So I don't know, when you say basic, I don't know how basic you're talking about, but those are some ideas. It's just Google bookkeeping courses in Alberta and just see what you can find.
Yeah, thank you. And yeah, let's go to the question. So I'll read it out so folks know what we're talking about. For a small charity, what role does the treasurer play in ensuring that there are adequate controls in place? As in, are they supposed to check that some of these controls are in place, or?
So I'm going to answer that question first from the point of view of an auditor. So when we as auditors are expressing an opinion on your financial statements, one of the things we bring to the attention of the users of the financial statements is that it's up to the board to ensure that there are adequate internal controls in place within limits. So the board has sort of and if they've delegated this to the treasurer, then to the treasurer, but the board in general, whether working through the treasurer, through an audit committee or a finance committee, oversees management. And one of the things they have to oversee in their role as trustees of the organization is making sure that management is running the organization in a fiscally prudent manner. So they would ask questions about the nature of internal controls that are in place, probably not nitty-gritty. So for example, when I was CEO of a nonprofit, the board asked questions like, do you have an HR policy that covers these 4 areas or 5 areas? They didn't actually tell me what the policies needed to be, but they asked, do you have an HR policy that addresses these things? Do you have a financial procedures manual that covers these 5 things? Do you have insurance in place for these things? So the board had an oversight role, and they addressed it in my case, and in the case of many governance models, the board addresses internal controls in sort of a high level sense, where they put in some parameters. As a minimum, you need to have a risk management, a risk register or whatever. This is getting kind of sophisticated, but there you must have an HR manual. You must have, and then just ask the CEO or the executive director to affirm that they do in fact have those policies in place. A very tiny organization, the board or the representative of the board, which might be the treasurer or the chair of a finance committee, might ask more detailed questions. And they say, well, can I see that policies or that procedures manual? So I can't say definitively what the role would be, because it really would depend on what the governance policies of the organization say.
Perfect. Yeah. Let's address the question that came in chat earlier when you were talking about hiring and payroll. What about when the staff is only on contract?
So I'm not sure. I'm going to say what I think is meant by only on contract.
Mhm.
So if all of an organization's employees are contract only, then I would suggest that, and if they're, just if they're all part-time, then that might make sense. But if you have full-time employees who are on contract, then I would suggest you might want to get familiar with the CRA's guidelines on the difference between contract and employment, because I would be uncertain that that makes sense.
I think this person added to the question, they said project-based contracts and part-time.
Okay, if it's project-based and part-time, then you want to have some sort of a contract in place. Either a blanket one that's, sort of covers the nature of the employment, pay frequency, termination, just your basic contracts. And you probably would also want some evaluation points in there. And then the other thing to be careful about is watch if and when the person is hitting 30,000, are they charging you GST or not? And again, just because they're part-time doesn't mean that they're not employees. So I would still review the CRA guidelines and the difference between employment and contracts to make sure that the preponderance of the factors that lean towards contract are in fact met.
Okay, great. So I think that's all the questions we're going to get to today. I will mention that we had a question from registration about setting up a reserve fund policy. We had a question about what specific financial policies and controls should be in place. And we had a question, well, okay, so I'll address those two. Those are definitely questions that I think will be best answered in a clinic. So the easiest way to get set up there is to contact our admin line. We'll set you up with a quick call, and then we will, dig into those particular topics with you. It's just, sometimes these questions bring up more questions, and it is really helpful to just have a conversation with the expert. And then we had one last question about a registered charity acting as a flow through for funds. We actually just did a webinar about this, which I'm putting the link to in the chat. You can watch the webinar and go through the toolkits if you are interested in the new income tax changes, making grants to what we call grantee organizations now. So
can I just add on the question about the flow through?
Yeah.
Is like, if that's something you're thinking of doing, up until this year, you could only do it if the organization was acting as your agent, if there was an agency agreement in place. And so there's legal ramifications, and that is something that you might want a legal clinic as opposed to an accounting clinic about. And then, as Liz mentioned, the Act changed this summer to now allow charities to make grants to nonprofits that are not also registered charities. And there's quite a bit of restrictions on how that relationship would work and the homework you have to do. And that's the seminar that, or the webinar that Liz just referred to on making grants to non-charities.
Yeah, I think that's about everything. I'd just like to thank everyone for sticking on the line, and Stella, of course, for your immense expertise. And I hope you all gathered some insight here. Feel free to reach out to me if you have any sort of questions, and you should be hearing from us in a couple of days when the recording is ready. So thank you all.